Good morning, everyone. So thank you for attending. This is our GASB 87 implementation work session 3. Today we're going to be sticking around on the WebEx for a while to answer any questions you may have. Today's session is being recorded. If you have questions today, please raise your hand with the hand raise function and our moderator will unmute you to discuss, or enter your question in the Q&A section and we will answer it. Yesterday, agency lease, Monday and Tuesday, Monday, agency lease inventory reports were sent out for the 2/1/21 population. Emails were also sent to agencies that did not have leases in this population. If you or your agency has not received an email, please reach out and let us know. Also, if you would like someone added to your agency contacts for future OSC and GASB 87 communications, please let us know. If you notice someone on any email correspondence to your agency that is no longer with the agency, please let us know as well. And with that, I'll give it to Peter and then we'll open the floor for questions.
Good morning, everyone. Just a couple questions. I know maybe some of you have started looking at the template, entering some of the 2/1/21 population. Just a couple questions that we've got regarding the template. Someone asking if should we include any non-87 reportable leases on the template, and the answer is no. We should only include reportable GASB 87 leases that are over the threshold. So if you have a lease that's has an AAV of 50,000, that's not over the threshold, you would not include it on the template. So include only leases that are GASB 87 reportable and over the materiality threshold for that specific time period. Another question was regarding the sales for discount rate. I believe they have a red asterisk next to it, so it's gonna, you have to put an entry in there. So unless there's discount rate stated in your contract, please put 0 for any discount rate questions, because you may get a validation error if it's blank. So yeah, with that, we'll open up to any questions you may have. You can either type it into the question and answer box or raise your hand and we'll unmute you.
There is a question from Elizabeth Johnson. Let me unmute her.
Yep, I don't know, can you hear me?
We can, yep.
All right, great. I'm with New York State Office for People with Developmental Disabilities, and I was wondering if you could go into a little more detail on holdover leases, because, you'd indicated holdovers didn't need to be included. Then I thought there was maybe some clarification to that. So we do have some leases in holdover, but they're larger leases. So I was just trying to get a little more information on that.
Sure, thank you for the question. So under the GASB 87 standard, and Peter jump in with anything to correct or add, under the standard, holdover leases would not apply as they'd be considered closer to a short-term lease. And typically, once a holdover lease is renegotiated or whatever, it's under a new lease agreement contract. So for the sake of it, for lease accounting at the end of the lease term, since it would just be month to month, we wouldn't do anything with it. So if a lease is in holdover status, we aren't requiring it to be reported. Peter, I don't know if you have anything to add to that.
Yeah, we're making assumptions of what the holdover period and language is in the contract, but most of the time we've seen that the holdover is, whether it's verbal or written, it's a month-to-month contract where either side has the right to cancel the lease, where under those terms, it would not be GASB 87 reportable. So theoretically, you have lease 1, it ends on 12/31/21. That would be reportable up to 12/31/21. But once it goes into the holdover period in January, February, March of 2022, that term would not be reportable, and you would, when the new term is negotiated, it's almost like you're restarting a new lease. So instead of lease one would have ended 12/31. In theory, it's still going month to month, but for GASB 87 reportable purposes, it will not be reportable. You would still, you're still paying your rent payments. Those will still be rent expense. But for the first 3 to 4 months or however how long it's on the holdover period, it's not GASB 87 reportable. So then, say 6 months go by and all of a sudden you have you came to an agreement, and now the agreement's 7/1/22 through 6/30/2025. So now you're entering a new lease with a new term. So it's almost like that first lease is done. The holdover period was not GASB 87 reportable, and then you're entering a new lease for that new lease term. If you're, obviously different holdover periods, based on the language of the lease. If it's different than what we're assuming, it's showing of month to month, and each side has a right to cancel. Shoot us an email, and we can go over the details of the lease to see if it may be. But in our experience, the holdover is kind of that in between period where it's not GASB 87. You're still paying the rental payments month to month. It's still rent expense, but for GASB 87, it's not. It's like that first lease has ended.
Absolutely. Peter, I understand the concept of the holdover and the concept of it being month to month. For us, we do have, I have a lease in holdover that's completely, it's been in holdover for quite some time. It's completely month to month, so I get that. We do have some where we will have a renewal. It'll be like a 5-year lease with a 5-year renewal, and we go into holdover in between the original 5 years and until the renewal option is established and signed. So would that still be considered in holdover, or would the fact that it was kind of in between a renewal, would that change your thought on that?
That's a good question.
Because it would be the same lease. It would be an extension. I guess in my mind, I'm thinking believe me, I want to just not put him in there. I just want to be accurate.
Sure. I think we have to take that one back, because in reasonably certain, if we're making a reasonably certain determination, it's during the initial period, the initial term. You're saying we were reasonably certain that we're going to re-sign this lease, but because it takes time, the initial term ends, and then you're going in that holdover period. I believe even though you're reasonably certain to, I think we'll have to bring it back and talk about this one. But Corey, correct me if I'm wrong. Even if you're reasonably certain that it's going to be signed, because you're going into that holdover period of month to month, and each side has the ability to terminate.
Which they do, yes.
Which they do, then it is going to be, it's not GASB 87 reportable. And once that holdover period ends, then you would, enter the new lease as a new lease, and then become GASB 87 reportable.
If it's under the same lease contract number, we'll have to take this back and double check, but I'm pretty sure you'd report as soon as you find out the renewal is being taken and negotiated, and you would report the same lease number, but the differing information.
Yeah, that's what I'm talking about, a holdover that's in between renewals, so it would retain the same lease number. So I guess that's where I was.
Now, if it was still during the lease term, the initial lease term.
It's not in the initial lease term.
Yeah.
We can take some time in between.
Sure.
Renewals. But I guess in my mind, I'm going reasonably certain, okay, well, we have a renewal option. I know we're pursuing a renewal option. I know it's not going to be a new lease. So I'm like, do they want to?
Yeah, no, that's a good question. These are questions we want, because it gets into a gray area of, and we'll get back to it, or bring it up in the next session, because it is that gray area. I thinking about it, I think once it becomes a month to month, that kind of ends the term, whether you're reasonably certain or not. And then, just going back to what reasonably certain means, if you were in, and I'm not saying this situation, if you were in that first term and you're reasonably certain to do the renewal options, then you would include that term. But yeah, since there is a holdover period, when the first term ends, by the letter of the rule, it sounds like it's a holdover period that's not reportable, and then you would start up again when the new term is negotiated and then signed off on. But we'll double check on that.
That would be great. Thank you.
Thank you again for the question. So we have another question can we discuss cell towers? Multiple locations, no real primary contract end date, endless renewals expected. The question is, should we still use 5 years? Any other tips? So we have seen in a review a handful of cell tower contracts between a bunch of different agencies. If there are endless renewals, I would stick to what is listed in the contract, whatever terms there are in the contract, because that's what we're going to go for the reporting purposes. I know there are definitely specifics between multiple agencies and the towers too, so that may be something we should discuss on a separate call. If there's any specific questions past that, the tips would still be, if it's determined in the lease, they do qualify under a straightforward scenario for a GASB 87.
And just to, if I'm reading this in Corey, I don't think I've seen, too many cell towers. Even if you're reasonably certain for it to go 20, 30 years, you can only include in the calculation terms that are stated in the contract. So if the contract shows a renewal, the cell tower is going to be here, ongoing for 20, 30 years, but the contract only gives you a 5-year renewal. You can only include that 5-year renewal into the calculation. And then, the next contract that's signed. But if there is a contract that doesn't have a specific end date or endless renewal periods, which we'd have to look into, but in a situation where it is, you can only include in the calculation the payments that are specifically stated in the contract. And again, we're running into the materiality. Is this going to be, is the annual exchange value over $100,000? Which I think we saw a lot of cell towers that were kind of borderline, but keep that in mind as well.
Next question was, were the prior sessions where we went through the spreadsheet recorded? Yes, we have the session for that up on the website, and the LeaseController template is also up there as well, so you can pair it with the video when looking through. If you have specific questions, we can try and answer them. Some of them we may need to look at lease specific scenarios and answer from there.
And the web address should be on all the correspondences we send out. We have a blurb at the end that has the website address, so you can click on that link. And as Corey said, it's got I don't believe last week's working session is up yet, but the first working session where we kind of went through every cell for the lessee template is up there, as well as the first training that was done. And feel free to, I know we're going to have specific questions. So, you go through one for the first time, send an open item list to us and say, these 5 items, I don't know what the answer is. I don't know what they're asking here. So feel free to send that email to us. It doesn't have to be in these working sessions, but feel free to go through it, put your questions down and send it on to us, and we can answer your questions or set up a phone call, because we're looking at this for the first time, reviewing it for the first time as well. So any questions that you guys bring up helps us as well.
The next question is, how do you calculate the annual exchange of value of a contract? So we have this listed on the GFO on the website, but the AEV computation is the sum of all payments, so reasonably certain right to use payments in the contract divided by the reasonably certain term in months, and then you multiply that by 12. So it comes out to basically an average payment per year type of computation.
I'm gonna try to share, see how my sharing skills are, but I'm gonna try to share the website just so we can kind of walk through people where, I know we've mentioned the GFO a couple times. So Corey, can you see the website right now?
Yep.
Okay. So this is the State Comptroller website for new GASB standards. You can see right here is where you can find your lessee template, your lessor template. Those are the Excel templates that we've been talking about. You have your upcoming deadlines. These are for the deadlines that we sent in the emails that we sent out on Monday. these are deadlines, coming up quarterly that should be consistent year to year. Upcoming trainings. Here's the WebEx links. If you ever, looking for an email or a WebEx invitation, here's where we'll have the previous sessions that were completed. You can see this is the initial one we did, the working session 1, 2 will go up there, and this one as well. Some of the stuff is from last year where we asked for an initial inventory reporting tool, but a good place to go is down here, more resources for implementation. You have your GASB standard if you want to read through the standard and what specifically says. So, we may say something, you might say, hey, I read this way, so we can go over it and see where we land. We can bring it to the auditors. And then down here, this is the guide to financial operations. And click on this, it has some, it speaks about each policy, gives a blurb on that. And then it also, clicked on the wrong one. We go back to here. Resources, the one below it. This is the lease agreements, GASB 87. Gives some background to the policy, and then it gives some definitions. And here you can find your annual exchange value. And this is what Corey said. So it's basically your reasonably certain right to use payments divided by your reasonably certain term in months multiplied by 12. So what's that basically saying is, in layman's term, it's kind of what's your average lease payments you're going to pay each year. So you're going to include what's in the lease and any lease terms that you're reasonably certain to include divided by those months. So when we say 100,000 AEV, 300,000 AEV, use this calculation, which is basically saying, how much do you expect to, if we're talking about reasonably certain, it's not what you expect to pay that current year. It's, what you're reasonably certain to include in the lease liability. So this is where that materiality threshold comes in of AEV over 100,000 for periods 2/1/21 and going forward. Is there any additional questions or hand raises? Sorry about that.
Just a reminder too, for anyone that may have joined since the beginning, we did send out the original lease inventory reports to agencies, and we also sent out an email to all of the agencies that did not have leases in the original 2/1/21 inventory. So please contact us if you think you have not received one. We're just waiting on questions. If anyone has any questions and wants to discuss anything, please raise your hand or use the Q&A box. We can discuss anything specifically if you'd like. If we can't get an answer on something right now, we can get back to you on it. And just to reiterate, we are going to look into the cell tower question a little more. We are also going to check on the holdover between renewals as well. So we have more questions in the Q&A box. The first one is contract ID. Is that from SFS, the 12-digit number, or internal contract number beginning with an L? The contract ID we're looking for, the first column in LeaseController, is going to be your L number. There are requests for other contract and procurement numbers later on in the template. We had a follow-up question as well on holdovers, so month-to-month leases of laptops and other computers specifically. So again, if we have holdover leases with no renewal option in sight, and there may be negotiations or not, whether it's short-term or long-term holdover, they wouldn't apply for GASB 87. The exception we're going to look into, though, is if there is a renewal in sight, and we'll get back to everyone on that. We got another question in the Q&A box. Can we approximate the AEV by taking the contract amount divided by the number of years and use that to exclude contracts from consideration that wouldn't meet the $100,000 materiality threshold? So in your example in the question, it's close to the formula to be used in general. Using the annual exchange of value formula, they're will most likely be a clear indicator if a contract is going to meet the materiality threshold.
Just to follow up on that question, Corey just answered regarding the approximate the AEV by taking the total contract amount divided by the number of years. Yes, you want. I mean, if you have a list of leases, we're not asking you to look at every single lease, open up the lease and the contract, and if you see a lease and the total contract value is $50,000, $60,000 over 1 year, or 250 over 5 years, you can make that determination that's under 100,000. For the ones that are closer, it's a 80, 90, I think you do want to go into that lease and pull out everything you can to calculate that AEV. I'm not saying use the eyeball test, but if you have a small lease for $20,000, you can approximate the AIV and not include that into the GASB 87 reporting.
Any other questions?
Just a question that came in. Should we reach out to the FinRep email if you want one-on-one discussion with a member of your team? Yeah, like I said, send any questions you have. I know sometimes with these templates, there's a large amount of information. We can set up a Teams call. We can set up a phone call. Anything that would help you guys out to get through the process. So we try to respond to the answers as soon as we can, or to the email as soon as we can. Sometimes we have to go back and research and run it by some people, but we're checking the FinRep box all the time. And any question, large or small, send it along, and we'll get back to you. And again, we're always available to set up a meeting or phone call to help you out. And then another question: the annual value only includes lease payments or rent, correct? Would not include reimbursements to the landlord for taxes, gas, snowplow. Yes, it's just the rent payments, no common area, no rent, any services that are provided, common area services, or you have snowplow. I will say, if there is, rental payments do include if you have storage space or a parking spot, that is include a rental payment. But anything that's reimbursement to the landlords or for services that the whole of the common area of the building, that is not included in the calculation. They are still obviously expenses that have to be paid, but they are not included in the calculation for GASB 87.
There's one rare scenario where they would, and that's if it's included in the rent payment cost and you cannot break it out. So whether the landlord can't provide it or you can't make determinations on how much is for each.
Okay, so we don't have any additional questions. We want to thank everyone for listening in and for all the questions. It's been, it's helpful for us as well. It gets our wheels turning about some of the issues we may encounter. And again, the FinRep mailbox, always send, feel free to send any question. You don't have to, it can be one question, it can be 10 questions, we're always available to sit down and walk you through the template, because this is our first run through as well. So anytime you guys reach out to us, we'll be more than happy to help. And again, that it's FinRep GASB mailbox. It's the mailbox address is at the end of each email that we send out to you guys. So if there's no more questions and I don't see anything in the question and answer box, this will be the end of the working session 3, and we'll look forward to your questions throughout the week and the coming weeks, and we'll see you next week for working session number 4. Thank you.
So we are ending the session. I just want to make sure I did mention we are seeing the additional info for the cell tower leases. So we will get back to you on that. Thanks, everyone.